Lecture 3. Business and Corporate Taxation Script. Types of business entities. The U.S. tax system recognizes several types of business entities, each with distinct tax implications and filing requirements. Sole proprietorships are the simplest form, where the business and owner are considered the same for tax purposes. Partnerships involve two or more people sharing profits, losses, and tax responsibilities, as per IRC Section 701. Corporations are more complex, with C Corp subject to double taxation, corporate and individual levels, and S Corp allowing profits and losses to be passed through to shareholders' personal tax returns, as outlined in IRC Sections 11 and 1363, respectively. LLCs combine the liability protection of a corporation with the tax benefits of a partnership. Tax obligations for businesses. Businesses need an employer identification number, EIN, which functions like a social security number for the business. They must pay estimated taxes quarterly to cover income and self-employment taxes, as required by IRC Section 6654. Employment taxes, such as Social Security and Medicare taxes, are also important for businesses with employees. These are shared between the employer and employee, as specified in IRC Sections 3101 and 3111. Income and expenses. Business income includes revenue from sales and services. Deductible business expenses reduce taxable income. These expenses include operating expenses like rent, utilities, and salaries, IRC Section 162, cost of goods sold, IRC Section 263A, and depreciation on assets, IRC Section 167. Depreciation allows businesses to spread the cost of an asset over its useful life. Corporate tax returns. Corporations file Form 1120 for C Corp or Form 1120-S for S Corp. Sole proprietors report business income and expenses on Schedule C of their personal tax return, Form 1040. Partnerships file Form 1065 and issue Schedule K1 to each partner, detailing their share of income, deductions, and credits. LLCs file based on their classification, which can be as a sole proprietorship, partnership, or corporation. Deductions and credits for businesses. Several deductions and credits are available to businesses. The Qualified Business Income Deduction, IRC Section 199A, allows eligible businesses to deduct up to 20% of their qualified business income. The Research and Development, R&D, tax credit, IRC Section 41, incentivizes businesses to invest in innovation. Additionally, businesses can deduct charitable contributions, IRC Section 170, certain startup costs, IRC Section 195, and employee benefits, IRC Section 105. Recent changes and updates. Tax laws affecting businesses can change frequently. For example, the Tax Cuts and Jobs Act, TCJA, reduced the corporate tax rate to a flat 21%, as outlined in IRC Section 11(b). It also introduced limitations on interest deductions, IRC Section 163(j), and expanded the availability of bonus depreciation, IRC Section 168(k). Staying updated on these changes is crucial for compliance and strategic planning. Conclusion. For homework, review IRS Publication 334, which provides a comprehensive guide for small businesses, and prepare a list of deductible business expenses. We'll discuss these in our next session. Sources: IRS Publication 334, Tax Guide for Small Business. IRS Publication 334, Internal Revenue Code Sections 11, 41, 105, 162, 167, 168, K, 170, 195, 199A, 263A, 3101, 3111, 6654.